Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. 2024 comes to an end, and it's been an eventful year for the markets. It started off with a strong expectation of a Fed pivot marked by recessionary fears. It's ending with the narrative of US exceptionalism firmly in place. Dollar index is ending the year almost 6.5% higher. S&P 500 is ending the year almost 25% higher. Now, many narratives have played out. Recessions not materialized, economies surprising with their performance. Even in India, maybe there was a bit of a doubt on the pace of economic growth. At least that's the narrative with which we are ending the year. Good morning, JK. How was 2024 and what stories left an impact on you?
Good morning, Suraj. Yes, I think 2024 had almost everything that the market looks forward to as influencers, and definitely monetary policy played a very big part because there was a lot of volatility in the monetary policy outlook itself. We started off with a dovish outlook, and then again we went, cautious in July. September again, it was more dovish, and then end of the year, it was Fed was like after 1% cut in the policy rate to 4.5%. They were once again seen very cautious on their outlook for rates. This was more driven by the election outcome and upcoming policies of the new government in the US. So, just to give you a perspective, at the peak, 2024 rate was 2025 rate was expected to go up 3.4%, and now that is at just 4%. So that kind of cut back on the expectation of monetary policy by the Fed. And then, of course, we had other central banks cutting. Fed and ECB have both cut by 1%. But the expectation on ECB to cut more has kept the differential between Fed and ECB on the wider side. Now, you also had a wide divergences or extremes in the policies. Canada hiked, a lot more than all the other central banks, while Brazil was on the other extreme, raising the policy rate by 2%. India, of course, kept their policy tight because of inflation being higher than what was forecast. On the other side, we had then the geopolitical escalation. While Russia-Ukraine war was already ongoing, the Israel versus the Middle East war was escalating constantly, and it was there was no let up in the escalation, or rather the geopolitical risk sentiment constantly throughout the year, and that was always keeping the markets on the edge. But the surprising thing was that none of this seemed to be affecting the stock market. As you mentioned, S&P 500 is up nearly 25% for the year, and that is a very telling performance, considering that monetary policy was not constantly dovish, and the geopolitical concerns continued to haunt the minds of the traders. At the same time, if you look at Indian stock performance was perhaps quite subdued. End of the year, we are just about 10% from last year end. So stock market definitely had overall good performance in the global markets, when pockets of underperformance was also seen. The surprise element was regional political instability. We saw governments coming, being thrown out in some of the countries like Germany and France. We have instability in Canada also end of the year. And of course, Syrian government was thrown out after a long stint of 15 years by the ruling party. Then there were two positive political development, that was India, which had stability and continuance, was ensured after the election. So that was a good development as far as India is concerned. And then, of course, the US, November 5 elections. Till the last minute, it was going to be a close contest, but then what turned out to be was a landslide victory for the Republicans, which market had not totally ruled out, but not a landslide victory. They had expected that Trump could win back, but then the kind of victory that they gained control of the House and Senate, and then the president, White House, all this, it was a big surprise to the market, kind of taken positively by the markets as well, because since then markets have rallied. We have seen rally in everything. We have seen rally in the stocks. We have seen rally in the yields, and then we have also seen a rally in the dollar post that event. So that was the regional political politics. Yields, of course, have been, we have seen a very wide range. If you look at the 10-year US yield, we have seen almost 3.55%, and then we have also seen 4.63%. At the end of the year, it is now, as we get closer to the Trump government taking over on January 20, market is quite nervous on what policies will be there and how inflationary that will be and how the monetary policy will evolve going forward. Now, come to the Indian situation. We have had, the growth picture deteriorating to 5.4%. Inflation going up to 6.21, but then since moderated to 5.5%, but still remains quite volatile due to the food inflation. And of course, the trade deficit hit a record high after the surge in gold imports, which is an offshoot of the cut in custom duty by the government. So the trade deficit at 37 billion is a quite a bit of a concern, particularly in the context of capital flows that are very, very volatile. Now, speaking of the volatile capital flows, in 2023 we had as much as 28 billion of FII inflow, out of which 20 billion was for equities, and just 7 billion to 8 billion was for the bonds. But in 2024, the total flow has been 20 billion. Only 3 billion is for equities, and the rest of it was for bonds. And this is also because Indian bonds have got included in the many global bond indices. And but for that, I think we would have been in a much difficult position as far as the flow is concerned. So when we started here, I was writing that we were biased to see USD down against the dollar. USD down first before a rise to new highs. Yes, we were at around 83. We went down to 82.64, ending the year almost at the highs at 85.50. But definitely this much of up move in the dollar rupee was not foreseen by me. As far as the US dollar is concerned, it has had a wide range of around 6.5%. We started off the year on a dovish note for the dollar. We hit a low of 100.16, and we also hit a high of 108.5. Most of the gains for the dollar index also came in the aftermath of US elections, because on just before the US election it was at 103.5, and then we moved as much as 4.5% after that. So that's the way we have seen the moves last year. Of course, one product that was constantly under pressure was also oil, which was never able to raise because of economies slowing down in Europe as well as in China, and so that kept oil going above 75 constantly. Now, all this, how do we pan out for 2024? I think a lot of uncertainty. This is mainly coming due to policy uncertainty from the government and monetary policy uncertainty from Fed. As of now, market has discounted that Trump policies will be pro higher tariff, not against immigration, perhaps even deportation, etc. And then, of course, lower taxes and lower regulations. Now, all this can eventually turn out to be highly inflationary, and then higher rates for the dollar. What I would think is that all these factors have been quite well discounted by the market, in the sense that this is not something new. Suppose tomorrow Trump comes and says imposing 50% tariff on China, yes, we will have some knee-jerk reaction, but that is not something unexpected like it was in 2019 or 2018. So market will no doubt react immediately if there's any such announcement. But then, if you look at the market positioning, I think dollar has been higher already. Yields have been higher already, and even the stocks have not really discounted the impact of the higher yields, and stocks have already gone up. On the basis of a positive factor. So all the positive factors for the US have been discounted. But I think going forward, what I see is that even if the tariffs were to be imposed, like it happened in 2019, the impact on inflation will be much slower. It will take at least 2 to 3 quarters. And then on the yield, I think while we have broken 4.50 and projections are towards 5%, I think that is going to be quite temporary for two reasons. Because I think US consumers are, probably done their best for supporting the economy. We are seeing big stress in the credit card default, at record high. And then, higher the yield goes, the bigger the problem for the US government, because that increases their finance cost for servicing the debt. And therefore there will be some measures which will, it can even be from the, Fed starting to monetize the debt or anything like that. And finally, on the dollar itself, the government or the new government can actually talk down the dollar, because that is one way they can actually reduce the impact of tariffs, and see that inflationary, rather the deficits are addressed. So I think markets are well positioned for the inflationary policies and rise in the dollar. So if anything, there will be, if their policies are not as worse as expected, I think we can have a bigger reaction on the downside for the dollar. As far as the rupee is concerned, once again, all through the year we have moved up. And while in terms of percentages, it is about 3% from 80 low of 82.65 to 85.5. It's about 4%. But then I think looking at the positioning, I think market has not been selling. FIs have not brought in a lot of money, as I said, for equities of this 3 billion. And so I think market, despite many factors which don't support a rupee to gain, positioning of the market may actually lead to some sort of a pullback for the rupee, at least to start with, or post if Trump taking over. So all in all, it was a very volatile year. A lot of things happening going forward. Yes, we are starting with uncertainty, but it does seem like markets are positioned for those uncertainties, and perhaps some relief can see the dollar retracing a bit on the downside. With that, I wish all of you very happy 2025 and make a lot of money. Thank you.
Thank you, JK, for a wonderful summation of this year. It's really been a pleasure to host you in Almus Market Mornings. We are also slowly approaching our 800th episode since we have been doing this podcast since 2021. So it's been a
Congratulations.
great learning experience for me and all of us who have been on Almus Market Mornings. You have been so consistent, JK. So thanks for showing up every day and doing this recording. Uh, Now, from all of us here at Almus, we hope 2024 has been lovely for all of you, and may 2025 bring in whatever you are hoping for. Have a lovely time, and we will see you all next year, as always, with the latest round of updates in the financial markets. Thanks for listening.